How does the combination of falling rates and obviously a global banking crisis and a crisis here in the U.S., how does that impact your business?
Well, obviously, the lower the rates, the busier we are, and the lower the rates, the more excited the buyers get, and affordability kicks in. However, sellers have to sell, so that combination has to meet.
Now, Stanley, we've seen rates come back a bit, obviously, in the last couple of weeks, but the trajectory could still be higher. In fact, we saw them pop up a little bit yesterday. For buyers out there, there's a lot of talk of mortgage rate buy down. Some people don't understand that, and they don't know if it's a risky thing. Can you explain what that is?
Well, it's not really risky. It's you're spending upfront money to buy the rate down temporarily, and it's fine. Sometimes the mortgage company contributes to that reduction in price. But by and large, you're still getting a 30-year mortgage at a rate that's going to be market, and you're just moving around how you're paying for it.
So coming up today, we have existing home sales. And Diana, I want to ask you about this, and Stan, you as well. Diana, you first. Existing home sales are going to be coming up later today. How big of an impact is that going to have on today's market with all the other factors?
Well, the problem with a lot of this data, as you well know, is that it's very backward looking. So we're getting existing home sales for February, and those are contracts that were signed in December and January. Now, rates dropped back pretty sharply in January. That's when we heard from the builders that they were seeing a sudden surge in demand and signed contracts. We also saw that in the pending home sales. So you'll probably see a bump up in existing home sales because they're for February. But then in February, rates went up again, and so there may be a pullback in the next month. It's really hard to say right now.
Stan, is this something you track for your business as well?
Not very closely. The reality is home sales move in a very narrow band. Given the total course of all mortgages done, the variation in home sales is fairly small. I think it is important to note that sellers, there's not a lot of inventory on the market. So that really drives the price up if demand rises. So I think affordability is going to be a major concern going forward.
And Stanley, do you have any concern, given the banking issues, that there's going to be a problem for your own business to get liquidity to lend to others?
Well, I think liquidity is going to be the issue as we move forward. The uncertainty certainly creates issues in and of itself. And I think if the banking system is uncertain, people tend to hoard money, whether it's the consumer or businesses or banks. And I think that there is going to be some tightening of credit as people are more careful with what they do with their money. We're pretty well situated to face the issues as they confront us. But I think in the broader markets, I think liquidity is probably going to be the next great challenge.
All right, Stan, one thing is for certain, there's a housing shortage here in the United States. People put it at least about 2 million units. Right now, with rates so high and a lot of people hesitant to sell their home because they would be buying a house at a higher mortgage, how long do you see this shortage lasting?
Well, there's just not enough supply, and I don't think the supply is going to come online quick enough to make a difference in this buying season anyway. I think if rates get lower and the country stays at full employment, then the opportunities are certainly there. But the Fed is doing everything it can to dampen demand, and when you combine that with the heavy deflationary tendencies that we've seen with these recent bank problems, I think we're going to have lower interest rates, and I think it's going to drive property values higher as the demand bids these houses up.